Diving into the stock market. What's the big deal? The stock market can seem mysterious, full of complex jargon and fast-paced trading. But at its core, it's a giant marketplace. Companies list themselves to raise money from investors. They need capital to grow, develop products, or expand. Instead of borrowing, they sell shares to the public. By buying shares, you become a part owner. You share in their successes and failures. The stock market connects businesses with investors. It's a dynamic ecosystem driven by supply and demand. Understanding these fundamentals is key to navigating the stock market. Demystifying shares, your piece of ownership. Let's break down what shares actually are. Imagine a company like a giant pie. When you buy shares, you're buying slices of that pie. Each slice represents a tiny portion of ownership in the company. Now, how do you buy and sell these slices? That's where brokerage accounts come in. Think of them as your gateway to the stock market. Brokers act as intermediaries, executing your buy and sell orders on stock exchanges. It's all about supply and demand. Riding the bull, the upsides of stock market investment. So why do people brave the ups and downs of the stock market? The answer is simple: potential for profit. When you buy shares of a company that performs well, its value increases. This means your shares become more valuable, and you can sell them for a higher price than what you initially paid, earning a profit. This potential for growth is a significant draw for many investors. Over the long term, the stock market has historically trended upwards, outperforming other asset classes like bonds or savings accounts. This doesn't mean it's a guaranteed get-rich-quick scheme, far from it. Investing in the stock market requires patience, a sound strategy, and a tolerance for risk. However, for those willing to ride out the inevitable market fluctuations, the potential rewards can be significant. By investing in companies you believe in, you become part of their growth story and share in their success. Section 4. Weathering the bear, understanding the risks. While the stock market offers the potential for impressive returns, it's crucial to acknowledge the inherent risks involved. Stock prices can be volatile, meaning they can go up and down significantly in short periods. This volatility is influenced by a multitude of factors, including economic data releases, geopolitical events, and even investor sentiment. Remember, when you invest in the stock market, you're participating in a system driven by both rational and emotional factors. One of the biggest risks is the potential for loss. Unlike a savings account, where your principal is typically insured, the value of your stock investments can fluctuate. If the companies you've invested in perform poorly or market conditions deteriorate, you could lose money, even more than your initial investment. Diversification is key to mitigating these risks. Instead of putting all your eggs in one basket, spread your investments across different companies, industries, and asset classes. Section 5. The market's ripple effect impact on the economy. The stock market's influence extends far beyond the trading floor. It plays a pivotal role in the overall economy, acting as a barometer of economic health and a driver of growth. When the stock market is performing well, it signals confidence in the economy. Businesses are more likely to invest, expand, and hire, boosting economic activity. Consumers, feeling wealthier due to rising stock portfolios, tend to spend more, further fueling economic growth. Conversely, a downturn in the stock market can have the opposite effect. Declining stock prices can lead to a decrease in consumer and business confidence, slowing down economic activity. This interconnectedness highlights the significant impact the stock market has on our daily lives. Section 6. Wrapping up. Key takeaways from Stock Market 101. The stock market might seem intimidating at first glance, but by understanding the basics, you can begin to navigate this exciting world of investing. Remember, investing in the stock market allows you to become a part owner of companies you believe in, participating in their successes and challenges. While the potential for profit is alluring, it's crucial to acknowledge the risks involved. Stock prices are inherently volatile, influenced by a myriad of factors. Diversification is key to mitigating these risks and building a resilient investment portfolio. Finally, recognize the profound impact the stock market has on the broader economy. Its performance can influence business investments, consumer spending, and overall economic growth. By staying informed and approaching the market with a balanced perspective, you can potentially harness its power to achieve your financial goals.